Today we are going through the best apps, accounts and brokers to have in your toolkit in 2025. Welcome to Get Started Investing, a podcast where we unpack everything that you need to know to start or grow on your investing journey. My name is Bryce, and as always, I'm joined by my equity buddy, Ren. How are you?
I'm very good, Bryce. Very excited for this episode. Throughout this series, we have built the foundations of our financial house.
Yep.
Building this metaphor on the fly as well. And then we have, I'm going to kill the metaphor. Then we've sorted out our budget and maximized the amount that we're saving. And now, in this episode, the question to answer is, what are we going to do with all that money?
Yes. So we're looking at, as I said, the best accounts, brokers and apps to help you. And by the end of this journey, you'll have the knowledge and skills to tackle the year ahead with confidence and smash your financial goals.
Yeah. So apps, brokers and high interest savings accounts are the three platforms that you mentioned. And really the idea is it's all you need to build wealth in 2025.
Yes, that's it. A reminder that as we go through this, there is an accompanying handbook. There'll be a link in the show notes that provides additional resources for you to build wealth and start 2025 financially fit.
But before we get into it, one thing we've loved about this series is hearing from the Get Started Investing and Equity Mates community. The fact that there are thousands of people across Australia on this journey with us, working to make 2025 their best financial year yet, is just, it's nice. It's encouraging. This investing can sometimes feel quite lonely. But there's a big community out there doing the same thing. So we asked you, what are some of your favorite resources and platforms that you're going to use to invest this year?
The best tool that I use at the moment for investing or managing our money is a spreadsheet that I've made up. It shows all of our expenses, like bills and groceries and all that type of stuff. It helps us allocate our money to the right accounts and automate our bills and streamline our kind of money managing process.
I know this is lame. I use a few different apps and stuff, but my favorite is still Excel, tracking on that.
Steak the best. Keep it simple, stupid.
Superhero. It's got my ETFs and my super all in the one platform.
So let's crack into it. The first thing we want to look at is the high interest savings accounts and whether or not we're in the best ones.
Yeah. Now, in terms of what you're using your high interest savings account for, where it fits in your financial plan, your emergency fund, and then potentially if you've got any other short-term savings goals, maybe you're saving for a house deposit, maybe you're saving for a holiday. You don't want to put that money at risk in the market. And so you want to make sure you're getting your best possible rate of return in a high interest savings account. Now, there's a holy grail of resources when it comes to figuring out the best high interest savings account. It's a Google sheet that's put together. It's often shared on Reddit and it's updated, and it's got all the major banks and a lot of them smaller banks and their high interest savings accounts, their base rate, their bonus rates, if they have honeymoon rates for people that are new customers, and then the requirements that you need to hit to get those rates.
Yeah.
So we're going to talk through the top 5 in this episode, but if you want the full list, the place to go is the handbook that we've produced alongside this series. The link is in the YouTube description or the show notes, and you can see all 78 rows of bank accounts that you can sign up with in Australia.
There are two things that we looked at to create this list. The first is that it's the requirements are not overbearing and they are achievable each month to get the bonuses. And also we're not looking at honeymoon rates. The bonuses apply for the duration of the account. So let's get stuck in.
All right, well, let's just start with the best. In Australia, at time of recording, there are 3 savings accounts that will pay you 5.5%. You've got UBank, ING, and Move. Now, Move we don't love because the bonus rate only applies up to $25,000. But those are the 3 that top the pops and sit on 5.5%.
Love that. Can't complain with 5.5%. Number 3, there is it's Rabobank's Premium Saver, 5.35%. All you need to do is grow your balance by $200 a month to be eligible for that.
So Bryce, that's comes in at number 4, I guess, if the 3 on 5.5 all sit at the top. Then we've got the next tier down is there's 3 that sit at 5.25%. So that's ME Bank, Great Southern Bank, and RACQ. They all have different conditions, so you've got to check them out. But they round out our top 7.
Yes.
Yeah.
No, you'll notice none of the big banks are in there. So if you are with one of the big banks, make sure you're doing your homework. It is very easy to set these up and transfer your money across. No reason you shouldn't have a savings account without a 5 in front of it.
Now, one thing that we want to give a special mention to is just the bank with the highest interest rate with no bells or whistles, terms or conditions, hoops you have to jump through. It doesn't have a bonus rate. It's just got a set rate. That is the Macquarie Savings Account, which now pays 5%.
Yeah.
Yeah.
You don't have to do anything. How good. Alrighty. So that's the high interest savings account. Let's have a look at our brokers, because that's where we're going to be doing a lot of the activity when it comes to building our wealth. Now, in our book, which was awarded the best business book in 2024 for personal finance and investing, Don't Stress, Just Invest, we go through 4 criteria that we look for when it comes to choosing a broker, because I think there are almost 40 brokers now in Australia. The choice is overwhelming, and depending on what you search for in Google, you're going to get a raft of different options. So it's important that you know what you're looking for. So the first thing we look for is the cost of brokerage. We want to be looking for brokers where we can invest and the cost of brokerage is less than 1% of what we're investing in total. We want to be able to automate our investing, so having an automation. We want access to global markets, and we don't want brokers that offer additional products that are dangerous, such as CFDs.
Yeah.
So that's the criteria. Now, with that in mind, let's have a look at what's available here in Australia, or some of the best ones.
So there are 5 brokers that meet our criteria at the moment, and I do say at the moment deliberately because it's constantly changing. They're constantly investing in new features. There's new pricing coming out. So it's worth staying across the changes in the broker landscape. But at the moment, there's 5. So CommSec, Stake, Superhero, Perla, and Sharesies. We'll just go one by one and outline the key criteria. So Bryce, why don't you kick us off? Biggest broker in the land. CommSec.
Yes, CommSec. So it's $5 brokerage for up to $1,000. For $1,000 to $3,000, it's $10, and then it increases beyond that. And they do offer access to many international markets, probably more than any others that we went through there. 13 in total, and they offer they offer automation features as well. Stake, Ren.
So they have $3 per trade in Australia, up to $30,000. In the US, it's $3 US per trade, up to $30,000. Once you go above that, it's 0.01% of the trade amount. In terms of markets, you can access Australia and the US. And then they recently introduced automation. So you can do recurring investments and recurring deposits as well.
Yes. Key thing to consider there, though, it's a minimum of $650 for recurring.
For recurring investments.
For recurring, yes.
Investments, not recurring deposits.
Yes, recurring investments.
Yeah.
Superhero, they are $5 per trade, no brokerage on US. They offer access to the Australian and the US markets, and they do have an auto invest recurring feature. You need to have a minimum of $10 to make that investment, and away you go.
2 to go. Next one is Perla. In the Australian market, it's $6.50 per trade. They also have this prepayment thing where you can pay $5.50 per trade if you pay in advance. In the US, it's $6.50 US per trade. There's also a foreign exchange fee. There's a foreign exchange fee with all of these guys when you change to US dollars. Perla also offer access to Australia and the US markets, and they have similar automation features. Automate for recurring investments. They have recurring deposits as well. They also have a roundup feature where you can plug in your banking app, and they can round up purchases to the nearest dollar and auto invest when it gets to a certain amount.
And then finally, Sharesies. So Sharesies have a percentage-based brokerage, 0.5% for the first $3,000. They offer access to Australian and US markets as well, and they give you up to 5 customizable orders containing up to 100 different investments that you can regularly invest into. So you can kind of create your own mini portfolios or ETFs there.
Now, if you're wondering about the different brokerage structure, 0.5% rather than a fixed dollar amount like all the other brokers we've spoken about, Sharesies is the best platform, in my opinion, for really small dollar investors.
Yeah.
Like if you want to invest $5 at a time, for me, it's honestly a no-brainer. To be honest, they're the only ones that will let you invest that small amount. But it is just like something that's quite good about their platform. So, you know, if you're investing $1,000 at the time, 0.5% of that is $5. And so that's similar to a superhero, a little bit more expensive than a stake.
Yeah.
But if you're going to invest $1 at a time,
it's not going to cost you $3.
Exactly. Then you're paying what, 5 cents?
Yes.
No. 5 cents?
Yes. $1.
Yeah. No.
0.
A fraction of half a cent.
Yeah.
I don't know if they can charge that. I guess they probably can.
Yeah, they probably could. Anyway, we will include a table with the comparisons to all of those brokers in a bit more detail in the handbook. There'll be a link in the show notes for you to download that.
I think, look, if you just feel like we threw a whole bunch of facts and figures and numbers at you, the takeaway is this. There are so many brokers out there, and they're all commodities. And the brokers don't like us saying that, but they're commodities in the sense that they're competing on price for the same thing, which is giving you access to these stock markets. And whichever one you buy it through, you're buying the same thing. You're buying BHP on Sharesies or Superhero, it's the same BHP. You're getting a similar share price, and you're getting the same dividends from the company. There's no discount if you buy through a certain broker. There's no dividend boost if you buy through a certain broker. So the 5 that we've listed, there's no bad choices there. CommSec, Stake, Superhero, Perla, Sharesies, go confidently with any of them, because what matters is getting invested, not which platform you use to get invested.
But Ren, there are also some investing apps that are really helping beginner investors get into the market and understand how it all works, but also giving us access at very low cost.
Now, this is a really confusing distinction because all 5 brokers you just mentioned have apps.
Yes.
So aren't they investment apps?
Technically.
So what's the distinction we're making here?
The brokers that we've just gone through give you the full menu of options available on those markets.
Yep.
Everything available on the ASX, everything available on the US markets. The investing apps that we're about to go through are more limited in what they offer, but still give you access to build wealth.
Yeah. They try and in some ways they're trying to influence your behavior to make good investment decisions as well. And their feature set is all about encouraging good long-term investing, but that comes at the cost of giving you just the full menu and saying, go have at it. Yeah. So there's 3 that we think are worthwhile looking at. There's Raise, BetaShares Direct, and CommSec Pocket. So why don't you kick us off?
So Raise is a micro investing app. It allows you to round up your spare change and invest in predetermined portfolios. A great way to get started, and you can do it with a matter of cents. Or you can add your own money on top of your roundups. The minimum there is $5.
So the one thing to be mindful of with Raise is just the fees. So $4.50 a month for accounts under $20 is where it starts. And then $5.50 if you go to certain portfolios. But then above $20,000, it's 0.275%. And so it's just, you're going to be paying higher fees with Raise, really at any point, like 0.28%. And if you're investing in an underlying ETF, that, IVV charges 0.03% as a management fee. So it's like, you just have to interrogate, what are you paying for, I think is the call out here. And similarly, if you've got a really small balance, if you're investing $20 a month and they're taking $4.50 in fees, like, again, it's just a question about, as a percentage of your investment, is that the right call?
Yeah.
That would be my call out there.
So the next one is CommSec Pocket. They offer a curated selection of ETFs, not everything that is available. It's a minimum investment of $50. You can automate monthly or fortnightly, or you can put in lump sums. Again, keep an eye on fees because depending on how much you're investing, you can start pushing above that 1% that we try and aim for. So $2 is the brokerage fee up to and including $1,000.
Yeah, I think CommSec Pocket's fees are pretty reasonable.
Yeah, it's if you're putting $50 in.
Yeah. But keep that 1% rule in mind. But yeah, $2 brokerage is cheaper than almost all the brokers. It is cheaper than all the brokers.
Yeah.
Just don't want you to be too hard on them.
I just think you can, anyway. And then finally, the newest to market is BetaShares Direct. Now, they offer zero brokerage for ASX traded ETFs, as well as ASX 300. So that's the top 300 companies listed on the Australian stock market. As I said, new to market, and they offer all the features. They have Autopilot, which is recurring investments into up to 5 BetaShares ETFs with a $100 limit. You can auto invest into pre-built portfolios, and there's portfolio monitoring and rebalancing, so plenty of options.
So they have Autopilot, which you mentioned, which is for BetaShares ETF. They also have custom portfolios where you can automatically invest into non-BetaShares ETFs. That does come with fees that aren't high, that net out to be kind of similar to brokerage depending on how much you're investing.
So look, there's plenty of information to digest there. A reminder to download the handbook. You'll find some comparisons in there, but there's plenty of information on the Get Started Investing feed as well, where we've done deep dives on a lot of these products over the past 12 months. So make sure you search the feed. But that does bring us to the end of today's episode. Next week, we're looking at top ETFs and stocks for 2025, and then we'll be closing out the series with how we are investing. So thanks for listening. Absolute pleasure. Ren will pick it up next episode.
Sounds good.